You know how it is. You want to get a real handle on something important, something that could really change the game, but without getting bogged down in endless jargon.
Yeah, feeling like you need a PhD just to follow along.
Exactly. That's what we do here. We dive deep into the complex stuff, pull out the insights that, really matter, those aha moments.
Make it clear, make it quick.
Right. And today, we're laser focused on something pretty innovative happening in property. Dubai's direct real estate tokenization framework.
Yeah, we've got some fascinating material here. There's a comprehensive look at the framework itself and also what someone called a wizard's roadmap.
A wizard's roadmap. Okay. Sounds practical.
Yeah, like a step-by-step guide on how it's all supposed to work. Our mission really is to understand how Dubai is using blockchain tech to, well, completely reshape real estate.
How it's owned, traded, regulated, all of it.
Precisely. And crucially, what this means if you're interested in, accessing that market.
Okay, let's jump right in. Direct tokenization, that sounds like the linchpin here.
It really is.
Our sources mention that traditionally, if you wanted to pool money for a big property, you'd often have to set up special purpose vehicles, SPVs.
Or use offshore structures, yeah. That's been the standard way.
Sounds complicated. And probably expensive.
Exactly. Those traditional methods, they worked, but they definitely came with legal hoops to jump through, operational costs.
Right.
What's really interesting, maybe even revolutionary about Dubai's approach is this direct tokenization.
So what does that mean practically?
Well, instead of creating these separate legal entities to hold the property title, they're putting the actual title deed itself onto the blockchain as tokens.
Okay.
So if you own a token, you directly own a fraction of that real-world building or land. It's like, imagine digitally slicing up the ownership deed.
And each slice is a token tracked securely.
On the blockchain, yeah. Cutting out a lot of that complexity you mentioned.
Which should, you'd think, bring down costs significantly. Okay, now here's something else that caught my eye. This unified regulatory oversight.
Ah, yes. The DLD and VAR working together.
The Dubai Land Department, DLD, and the Virtual Assets Regulatory Authority, VARA. Why is having both of them aligned such a big deal?
Well, think about it. Sometimes you see a split, right? How traditional assets like property are regulated versus how new digital assets are handled.
Different worlds almost.
Kind of. So bringing together the DLD, who obviously know property inside out, and VARA, the virtual asset specialists, that's quite significant.
It creates one clear set of rules.
Exactly. A single, clear framework for the whole tokenization process. That's huge for transparency and, maybe most importantly, for investor protection.
Yeah, that makes sense. Moving away from a potentially fragmented or confusing picture.
Right. Toward something much more coordinated, builds trust.
Definitely. Okay, another innovation jumping out. The blockchain integrated title registry. So we're moving beyond dusty filing cabinets.
Precisely.
Yeah.
The old way, paper records, maybe siloed databases, it's just not efficient. Prone to errors sometimes, too.
Sure.
What's transformative here is linking the official land registry directly with the blockchain.
So it's not just a separate system. They talk to each other.
They're integrated. It creates this, well, essentially an unchangeable, super secure digital ledger. And it updates in real time.
Wow, real-time updates.
Yeah. So ownership details aren't just accurate, they're instantly verifiable by anyone who needs to see them. It's a fundamental shift, really.
An immutable, real-time record.
Yeah, that's a game changer for trust. Now, something I know listeners will be keen on, fractional ownership.
Ah, yes, democratizing access.
The sources really stress how this could open up high-value properties. Can you sort of paint a picture of what that means?
Absolutely. I mean, historically, investing in prime real estate, especially somewhere like Dubai, needed serious capital, right?
For sure. Out of reach for most people.
Exactly. It was mainly for wealthy individuals, institutions. Fractional ownership enabled by this tokenization just breaks down those massive barriers.
How small are we talking?
Well, it allows people to buy much smaller, more affordable slices of even really expensive properties. Think about it. Maybe you could own a tiny piece of a luxury apartment, like overlooking the Burj Khalifa or something.
Potentially, yeah. With a much smaller initial investment than buying the whole thing. It's not just about lower ticket prices. It's fundamentally changing who can participate in this asset class.
Giving more people a chance to build wealth through property, that's huge. Now, it sounds like Dubai is being careful here, not just rushing in. There's mention of a government-led pilot program.
That's a really smart strategic move.
Why do it that way?
Well, some earlier tokenization attempts elsewhere, maybe they lacked full regulatory backing or clear rules. This pilot, backed by the government, creates a controlled space.
Like a test lab.
Sorta, yeah. To thoroughly test and refine the whole process, making sure the tech works smoothly, the legal stuff clearly defines ownership.
Before rolling it out wide.
Exactly. It's about minimizing risks, gathering real-world data first.
Sensible. Okay, finally, before we zoom out. Enhanced market liquidity. Real estate is famously illiquid, right? It takes ages to sell sometimes.
Oh, yeah. It can be a long, drawn-out process, negotiations, paperwork, high transaction costs.
So how does tokenization help?
This is potentially a massive transformation. By representing property as digital tokens, you're basically turning it into something that can be traded on secondary markets.
Like stocks.
A bit like that, yeah. Or other financial assets. It opens the door to much greater liquidity, the ability to buy or sell your fraction much faster, potentially more efficiently.
Okay.
And usually, when you have more trading activity, you get better price discovery too. The market value becomes clearer, reflects supply and demand better.
So potentially moving from months or years to much quicker transactions, that could definitely attract new investors.
That's the hope.
Okay, so we've hit the core innovations. Let's pull back a bit. What are the big strategic goals here for Dubai? What are they trying to achieve?
The sources point to a few key things. First, really simplifying ownership and how capital flows. Getting rid of those complex SPVs we talked about.
Right, the direct approach again.
Yeah. Direct tokenization makes transactions potentially faster, reduces the legal wrangling, makes investment flow more easily.
Okay, simplification. What else?
Second, global reach and inclusivity. That fractional ownership piece is key here. It's not just about local money. It's about attracting international capital.
Opening the doors wider.
To a much broader global audience.
Yeah.
Making Dubai real estate accessible.
Makes sense. Simplify, globalize, include more people. What's third?
Third, and this is critical, setting a gold standard for regulation and trust.
Building that confidence.
Absolutely. By tightly integrating blockchain with the land registry, working closely with VAR, they're signaling a really secure, well-regulated environment. That's vital.
Okay. And fourth?
Fourth is just embracing technological advancement. They're not just tinkering, they're using blockchain strategically to position themselves as a leader.
Integrating advanced tech with traditional assets.
Right. Showing they're at the forefront.
And finally, the big picture. Economic transformation. It's bigger than just property, isn't it?
Oh, definitely. Dubai has these huge economic goals, doubling GDP, becoming a major innovation hub.
Right.
Making real estate more liquid and accessible feeds right into that. It's designed to attract investment, boost market activity, and drive that broader economic growth.
So, quick recap. Simplify, globalize, regulate strongly, lead technologically, and drive the whole economy forward. That's quite a vision.
It is. Very comprehensive.
Now, that wizard-style roadmap you mentioned sounds intriguing. Can you give us the quick version? What are the key steps if someone actually wanted to tokenize a property there?
Sure. It seems to break down into 6 main stages. Step 1, engage with the regulators. You got to talk to DLD and VARA right at the start, present the project, get the initial nod.
Makes sense. Start with the authorities.
Step 2, nail down the legal structure and compliance. Is the property eligible? Get the offering documents right. And crucially, robust KYCML.
Know your customer, anti-money laundering. Standard stuff, but important.
Very. Verifying identities, preventing dodgy dealings. Then, step 3 is building the tech, choosing the right blockchain, designing and auditing the smart contracts.
The self-executing agreements.
Exactly. They automate the rules of token ownership, plus integrating the user front end with the back end systems.
Okay. Regulators, legal tech foundations. What's next?
Step 4 is investor onboarding and education. Making it easy for investors to sign up digitally, but also making sure they understand the tech and the investment. Clear explanations are key.
Got it. Educate the users.
Step 5, launch the token offering. This might be done in phases. And the critical part here is synchronizing the token issuance perfectly with the official land registry update.
Ah, that direct link again. Making sure the token really represents the legal ownership from day one.
Precisely. And finally, step 6 is about the secondary market. Getting the tokens listed on regulated exchanges, making sure there's ongoing management, a feedback loop, keeping it healthy.
So it doesn't just launch and fizzle out. Needs ongoing support.
Right. Needs a functioning market.
Okay, that seems logical. But even the best plans hit bumps. What challenges does Dubai see, and what are they doing about them?
Yeah, the framework acknowledges potential hurdles. One is technical integration, making the new blockchain system talk smoothly and securely with the existing land registry.
Legacy systems meeting new tech? Always tricky.
It can be. Their solutions involve things like middleware, APIs, basically software bridges, lots of pilot testing, and getting independent security audits, making sure it's robust.
Okay, tech integration. What else?
Legal and regulatory adaptation. I mean, fractional ownership via blockchain is still pretty new territory legally.
The law needs to keep up.
Exactly. So they're setting up a dedicated legal task force. It'll work with regulators, keep contracts and interpretations up to date as things evolve.
Proactive legal work. Good. What about getting people to actually trade these things? Liquidity.
Yeah, market liquidity is crucial. If it's hard to buy or sell tokens later, investors won't be happy.
Definitely dampens enthusiasm.
So their strategies include partnering with established exchanges, maybe using market makers or incentives early on, and ensuring clear valuation methods.
Trying to kickstart the trading activity.
Then there's the investor knowledge gap. Not everyone gets blockchain or tokenization yet.
True. Needs explaining.
So big push on education. Clear, accessible info, multiple channels, and finally, staying agile. They plan an internal innovation and compliance team to watch the market adapt quickly.
So tech, legal, liquidity, education, and staying flexible. Sounds like they've thought through the potential pitfalls.
Seems like a very considered approach, yeah.
Sure.
Trying to anticipate and mitigate.
So let's bring it all together. What's the big takeaway here? Why should, London or New York or Singapore be paying attention?
I think Dubai's model, this direct tokenization, could genuinely set a new global benchmark.
Really? A benchmark?
Potentially. By directly tying blockchain tokens to legal property ownership, they're pushing for new levels of transparency, security, efficiency.
Things that real estate markets everywhere grapple with.
Exactly. Each step in their roadmap, if it works well, could be a blueprint for other places wanting to use blockchain in real estate.
A replicable model, perhaps. It really does feel like a fundamental shift brewing.
It could be.
Okay, so as we wrap this up, here's something to chew on. Dubai is directly linking blockchain tokens to legal title for property. Now think bigger for a second. If this direct model works, if it catches on elsewhere, how might it change how we own and trade other stuff? Not just buildings, but maybe art, intellectual property, other assets.
Interesting.
What new possibilities could that unlock for us as individuals, for markets globally? Something to think about. Thanks for joining us for this deep dive.